Hello guys, welcome again to another Hustlers Corner video. Why am I doing this video? Because I'm excited that you and I are together and we're talking building ourselves and getting better, investing our money right, and learning about the real estate space. First up, let's go straight to that sharp sound on the count of 1, 2, 3. Click, 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 click. Thank you very much, guys. Go to that subscribe button and click that like button. That subscribe button. Don't forget to switch on that notification bell. Now, I'm not a professional when it comes to real estate. I'm still new as well, but I have been investing in real estate ever since I've been in my 20s. I'm 42 years old right now. I've been investing in real estate for almost 20 years. But back then I'd buy property, I'd rent it out, or I'd buy property, I'd renovate it, I'd sell it at a later stage. Not like what I'm doing now. Now because I know better, and I'm informing myself even more, and as an investor and as somebody who's a budding property developer in real estate, I believe I know more than I did then. And that's why I'll also do these videos to encourage you guys to go learn real estate as well. Key reasons to invest in real estate. Let's get into it, guys. There's lots and lots of benefit out of it, but this is a long game. This is for people who want to play the long game. There's no grapes and chow here. There's no short-term income, quickly make money quickly and get out of here. Yes, you can still make money quick in property, in real estate. How can you do that? Let's read this article. Okay, there's a lot of benefits in it. The benefits of investing in real estate are numerous. With well-chosen assets, investors can enjoy a predictable cash flow, excellent returns, tax advantages, and diversification. And it's possible to leverage real estate to build wealth. Thinking about investing in real estate? Well, here's what you need to know about real estate benefits and why real estate is considered a very good investment. Key takeaways, ladies and gents. Key takeaways say real estate investors make money through rental income, appreciation, and profits generated by business activities that depend on the property. The benefits of investing in real estate include passive income, stable cash flow, tax advantages, diversification, and leverage. Real estate investments offer a way to invest in real estate without having to own, operate, or finance properties. Let's start with cash flow. It is the net income from a real estate investment after mortgage payments, as in your bond, as in the money that you pay every month, and operating expenses have been made. A key benefit of real estate investing is its ability to generate cash flow, as I was saying at the beginning of the video. In many cases, cash flow only strengthens over time as you pay down your mortgage. So the graph says the more you pay off your real estate, the more you are killing your debt, you pay off your real estate over a long period of time, the more your debt goes down. So the graph at some point ends up crossing each other. So that's why I say it's a long game, because you might have attained the real estate now and you pay it off for a couple of years as the years go by. And the money is not coming from your pocket if you're putting it out on rental income. If you're getting that rental income, you can use that rental income to service the loan from the bank. But let me tell you what the advantages are, apart from the tax deductions and what you can do with the tax breaks. There's opportunity also on how you can then, over a long period of time, as your real estate appreciates in value, it gains value. So your tenants are basically helping you pay off your bond, right? Or your mortgage if you're in America, as you guys would call it. But what's beautiful about it is that you can still go back to the bank 5 years later. If your tenants have been looking after your property, the maintenance has been good on the property, and then you can go and borrow against the property again. Because the value has gone higher, the bank is willing to give you the difference because they don't want to lose you as clients. They want to keep you, and they want you to keep paying them every month, right? They want to keep you as their client. So what do? You look at your real estate in a couple of years, and as you keep paying it off and you keep servicing your loans over a period of time, it appreciates. They'll send their assessors to check the value of the property, do their own due diligence, and then they will also be willing to borrow you the money again. Tax breaks and deductions. Real estate investors or real estate investments, right? Or let me say real estate investors, the investors. They can take advantage of numerous tax breaks and deductions, depending on whichever country you're in. Go understand the rules and regulations as far as real estate and tax is concerned in your country, so you can understand how you can get your tax breaks and deductions as well. But the article says, I'll put the link in the description, it comes from investopedia.com. Real estate investors can take advantage of numerous tax breaks and deductions that can save money at tax time. In general, you can deduct the reasonable cost of owning, operating, and managing a property. A quick fast fact, you can depreciate the cost of buildings but not the land. Okay, that's just a quick fun fact. But let's continue reading the article. And since the cost of buying and improving an investment property can be depreciated over its useful life, which is 27 and a half years. I don't know which country is this article from, but I'm assuming it's not from South Africa. Understand the rules and regulations and laws in South Africa first for this article to be relevant to you. Remember, I'm going to put the link in the description. You'll read the article for yourself. They're saying here, and since the cost of buying and improving an investment property can be depreciated over its useful life, 27 and a half years for residential properties, 39 years for commercial, you benefit from decades of deductions that can help lower your tax income. Another tax perk, you may be able to defer capital gains by using a 1031 exchange. Obviously, I'm sure that's in America. As I've said, go learn the rules of your own country. And appreciation. I think that's the most beautiful thing, as the value appreciates over years. Real estate investors can make money through rental income, any profits generated by property-dependent business activity, and appreciation. Real estate values tend to increase over time, and with a good investment, you can turn a profit when it's time to sell. Rents also tend to rise over time, which can lead to higher cash flow. Build equity and wealth. As you pay down a property mortgage or your bond, you build equity, an asset that's part of your net worth. And as you build equity, you have the leverage to buy more properties and increase cash flow and wealth even more. You know, one of the things that really messed us up, this is me, that messed me up when I was growing up, is because as a black kid growing up in the township, debt and credit is all one thing. Good and bad debt and credit, we see it as one thing because it's got one name in my indigenous mother tongue, is skolot. Skolot. You know, only later in life you get to understand actually you can use skoloto to your own benefit to create wealth, and that's what people have been using over the years when it comes to real estate. They use good debt. Basically, they can use the bank's money to create wealth or to pay off their properties or to even buy their first property. Find out how you can do that. Go do your own research out there. But as you pay down a property mortgage, you build equity and assets that's part of your net worth. And as you build equity, you have the leverage to buy more properties and increase cash flow and wealth even more. Portfolio diversification. Another benefit of investing in real estate is its diversification potential. Real estate has a low and in some cases negative correlation with other major asset classes. This means the addition of real estate to a portfolio of diversified assets can lower portfolio volatility and provide a higher return per unit of risk. I remember when I started out with TS Records, I was young. I mean, I helped my mom and dad purchase a farm in Pretoria, and we paid next to nothing compared to what my family has just sold it for now. And that was almost 20 years ago, but we've probably made ourselves, my family made over 3,000% profits in just a space of about 16, 17 years. 3,000% profits, can you imagine? That's what can happen with real estate, guys. It appreciates in value over time. It can be land, maybe you haven't built anything on it. Maybe there's just boreholes so you can be able to extract water, speak to the municipality, you can have electricity, whatever you want to use it for. The longer you keep it, it's still fine. Even if you don't want to sell your land, it's always advisable to keep the land. If you don't have ideas of making money out of it, it's okay, leave it for the next generation. If you've got other ways of making money. But there's ways you can make money off of it as land. You can develop the land, you can turn it into a commercial business. You know that you don't even have to pay any rental income or you can actually even, okay, I'll do more videos on those. Let me not confuse you guys. Let me just focus on this article and finish it off. I'm just getting excited because I just want to start sharing some of the things that I'm doing as far as my knowledge and my real estate investments concerned. But anyway, let's get into real estate leverage. Leverage is the use of various financial instruments or borrowed capital, that is debt, to increase an investment's potential return. A 20% down payment on a mortgage, for example, gets you 100% of the house you want to buy. That's leverage. Because real estate is a tangible asset and one that can serve as collateral, financing is readily available all the time. Have you seen that, guys? If you understand the rules and laws and regulations of your country, and you know that you're a good payer, you're not listed on the ITC, you're not blacklisted at all, and you work hard, and you earn a certain amount of income monthly, and you work hard to save up the down payment, as in the deposit, 20% deposit to your property. 20% can access you ownership of the entire home. You can buy a R1 million home with just 100,000 rands in your pocket, or just a little over 100,000 rands. So you can pay some transfer costs, deposit, and then you can finance the rest. If the banks feel, they look at your income bracket and they can borrow you money. And then what do? You put it out, rental income, service the loan again. In a couple of years it appreciates, borrow against it. And as the banks give you good credit or good debt in the future, credit, you use that credit from the bank to acquire more property or more real estate, and you just repeat the cycle over and over, and you can create wealth over a long period of time. But you have to go you have to go out there and do your own research. As they're saying here, a 20% down payment on a mortgage, this is in America, I'm sure, for example, gets you 100% of the house you want to buy. Let's get into the competitive risk-adjusted returns. There's risk in everything, right? But there's less risk in real estate because it's not going anywhere. People are always looking for a place to stay, especially residential real estate. Real estate returns vary depending on factors such as location, asset class, and management. Still, a number that many investors aim for is to beat the average returns of the S&P 500, what many people refer to when they say the market. The average annual return over the past 50 years is about 11%. Read more about that as well. Read more about inflation hedge. I won't finish the entire article, guys. It was just to encourage you guys to go do more of your own research out there. And there's also warnings on this article about mortgage lending and discrimination, that it is illegal because some people get discriminated against based on their own race. Mhlambe, if you think you've been discriminated against based on race, religion, sex, marital status, use of public assistance, national origin, disability, or age, there are steps you can take as well. The law is always on your side. That's why I'm encouraging you guys to go out there and understand the law. Real estate investment trusts, go read and learn about that as well. The bottom line here, and in summarizing this article, despite all of the benefits of investing in real estate, there are drawbacks as well. One of the main ones is the lack of liquidity, or the relative difficulty in converting an asset into cash and cash into asset. Unlike a stock or a bond transaction, which can be completed in seconds, a real estate transaction can take months to close, even with the help of a broker. It can take a few weeks or work just to find the right counterparty. Still, real estate is a distinct asset class that's simple to understand and can enhance the risk and return profile of an investor's portfolio. On its own, real estate offers cash flow, tax breaks, equity building, competitive risk-adjusted returns, and a hedge against inflation. Real estate can also enhance a portfolio by lowering volatility through diversification, whether you invest in physical properties or real estate investment trusts. I hope this article opens up your mind, it inspires you, it encourages you to go do your own research out there to also get into real estate. And I appreciate you guys plugging in. Like, share, subscribe, and I'll see you guys on the next video.